Rural Funds, the farming group listed in Australia, recently announced that it won its short seller court case. The stocks rallied, and we think the market is thinking that management has been vindicated. The problem is that if you actually read the ruling, it's not as simple as that, and it seems to us that the judge is making three clear points. First, Bonitas did not check their accusations with management. This led the judge to believe that Bonitas didn't care whether the accusations they made were false or not. Number two, Bonitas's logic and language was not as precise as it could have been and is therefore somewhat inflammatory and potentially misleading. 3. If the details of the transaction had been disclosed and agreed to, investors have no grounds for complaint. All of these points are probably fair, but we think they completely miss the point and potentially make a bad situation worse. Before we go on, I must remind you that under Hong Kong SFC regulations, we can't make stock recommendations to the public, and none of what follows should be taken as investment advice. In our report, we showed how management is using various accounting procedures to inflate asset values, which boost fees. This was not addressed in any way by the court case. We also showed how RFM uses theoretical models to calculate asset values based on assumptions that we think are flawed. This wasn't addressed in the court case. We illustrated how the Ernst & Young report did not vindicate the RFM valuations. Ernst & Young merely said they agreed with the method used, but made no assumption on the inputs that went in. As with any model, garbage in means garbage out. We noted how RFM used RFF money to create wealth at RFM, which we think disadvantages the RFF investors. This was not addressed in the court case. Simply put, we think the court case was all about legalese and lawyers' weasel words. We don't think they addressed the key issue, which to us was, can RFF maintain its asset values and fund its dividends out of self-generated cash flow, or is RFM simply using various accounting games to increase the fees it charges and pay dividends out of capital? If you believe the former, then RFM's yield looks quite attractive, but if you believe the latter, watch out, and before you decide, we think you should look at the details of the rural poultry group to see how minorities lost out. As to the court case, let's have a look at some of the details. Note 51. Bryant submitted an affidavit which falsifies the statements made. However, there wasn't a cross-examination, so this evidence could be nonsense, thereby invalidating the invalidation. 53. Bonitas did not ask RFM prior to publishing. Is this proof they didn't care? Maybe they just assumed that RFM was going to lie. Note 54. RFM has reportedly incurred significant costs, but we question whether they paid them or they incurred them on behalf of RFF. And, if what they say is true, why was there so much cost? Surely this should be part of normal audits and due diligence. 76. They say no evidence of fabricated rental income. If you take fabricated to mean it was simply made up, we agree. But if you take fabricated to mean the rental was structured in a way that boosts a headline number, we're not so sure. For example, when people use rent-free periods or capital payments, etc., to inflate the published rental number, is this fabrication or not? It's really rather hard to tell. And of course, RFF wasn't going to provide any evidence, and Bonitas wasn't there to proffer it. As to our work, we didn't say that there was any fabricated rent. We said that their accounting approach inflated their performance. This, as far as we can see, is fact. There isn't anything artificial about it. 77. Bonitas got the description of the recapitalisation wrong when they said that the dividends were undisclosed. However, the substance, i.e. that RFM was benefiting from the use of RFF capital, was correct. 89. We agree with the judge that it wasn't dishonest because they disclosed it, but what we said is that RFM was taking advantage of RFF shareholders to benefit themselves. This clearly is the case, but this was ignored in this judgment. The judgment could be summarised as saying, as long as I tell you I'm going to rob you and you agree to it, then I'm not robbing you. Yes, it is open and honest, but I'm not sure it's exactly ethical. 98. Mr. Bryant is quoted as agreeing with the Ernst & Young assessment. I wonder under what circumstances Mr. Bryant would be expected to disagree. 99. Bonitas was wrong. Technically, we think the judge is correct, but it doesn't deal with the issue of asset inflation, which is what actually matters to investors. 101, 102. The judge talks about an unlawful diversion, but that's not what Bonitas said. They use the word siphon. Now we can debate what siphon means, but it usually means to take a share in, and then it is hard to see why Bonitas' statement is incorrect. 103. The judge notes that the fact that RFM is private is irrelevant. We agree, but the fact that it has completely different ownership to RFF is absolutely not. 104, 105. The judge notes that there was no illicit diversion. Bonitas never said it was illicit, and as such the conclusion in 105 seems somewhat off. Nonetheless, our point is that just because it's legal and disclosed, it doesn't mean that RFM isn't benefiting at RFF's expense. 109. Ernst & Young assessed the valuation process, but they didn't confirm the valuations. That's a very big difference. You can monitor someone cooking food and check they follow a prescribed process, but if they use rotten ingredients, the food will still taste horrible. 112. Ernst & Young concludes that the asset values are supportable. Again, this confirms process, not that the valuations were correct or that E&Y will actually guarantee the prices. 113. The judge says there is no foundation for Bonitas's assertions. Actually there is, they just weren't introduced into the court case. We wonder if any of the valuers were cross-examined by the judge or anyone else during the court case. Overall, in so much that it deals with the wording of the Bonitas report, the court judgment may be fair. However, it singularly fails to vindicate management and address the issues that we covered in our report. Number 1. RFM is structuring rental agreements that lift asset values, so allowing RFM to receive higher fees than they would do if values were lower. Number 2. RFM structured the JNF deal to achieve an economic benefit using RFF shareholders' money. Number 3. RFM has a different economic agenda to RFF because its ownership is different. And number 4, RFM is using creative accounting to book profits that exceed economic cash flow. This allows dividends to be paid in excess of real cash generation, and this supports the share price, which then allows RFM to issue stock to replenish the balance sheet. None of these were in any way challenged or disabused in the ruling. As such, we stand by our report. If you want to dig into some of the issues we've covered, please visit the Royal Funds page on our website using the links below. There you can download some of their recent filings where we've highlighted some of the key areas. Alternatively, to learn more about our research or to keep up to date with our reviews, please subscribe to the channel or send us an email. Thank you very much for your time.